Right. Good evening, or morning, or afternoon. Not going to pretend I know what time zone everyone's in, but I will cater to my own. Hope everyone had a nice weekend. Waiting to see what Lord Elon Musk would do to our precious Bitcoin. A whole bunch of nothing, of course, being the answer. But yeah, I hope everyone's well, had a nice break, as unlikely as that may seem. Yeah, I'll wait for a few people to filter in and then have a chat. Audio video good? I even forgot to ask. I was taking it for granted. Yeah. Normies are coming. They're already here. um yeah, okay. Let's talk. So, first things first, of course, a thank you to the show's sponsor, which is Bybit. Make sure to visit their links in the description below if you'd like to support us, support the stream, support Technical Roundup, all of that good stuff, especially for your Bitcoin inverse futures trading needs. But yeah, thank you to Bybit. And as usual, subscribe to the channel, like the video, do all that stuff which makes the YouTube clock tick, because why not? It's free anyway and you'll be here for an hour, so might as well occupy the time in the process. Ferry says nice in between updates. Well, that's the thing, right? The short Twitter clips get 10 times, if not more, the viewership than the live streams, obviously. People just like it short and no nuance, detail, whatever. I was tempted really to share the stream link with the YouTube thread or whatever as well, but I just couldn't be asked. So we are here in a slightly closer knit circle. So thank you for being here, of course. Oh, that's a bit of spam. Let's get rid of that. Seems unnecessary. Okay, cool. So first things first, we've obviously had, happy February, everybody. 1/12 of 2021 is over. As terrifying as that may seem. So we've had some high time frame candle closes to deal with. It's one of those nice ones where we get the monthly close, the weekly close, the daily close, etc., all kind of in one spot. So those are always worth looking at. The monthly close, again, in terms of structure, we're stretched, so to speak. Not in terms of price being away from XYZ, but I mean stretched in terms of arriving at conclusions. Because, I mean, the levels up here aren't clear. We don't have some sort of range or consolidation to deal with to derive a bias. Really all we've got is the first monthly candle with a bit of a wick. That's about as much context as I can provide. You can see the preceding months, you had fuller bodies, which were expanding one after the other. Bigger candle bodies, no top wicks. This one, small candle body and a bit of a wick. How useful is that information? Not really. I mean, if you really want to get biased and almost cherry pick, you can kind of, again, cherry pick examples of monthly candles with wicks that are more visible than others and sort of say, oh, well, look, the next month is bearish, that type of thing. I'm not sure how empirically valid that is. The answer is probably not at all. And again, you can always find outliers, and then the market just kept going. I'll just say, broadly speaking, this, where we are now is pretty unprecedented anyway, and it's quite a different market to whatever past comparisons when Bitcoin was at 1,000 or less. So I think those types of extrapolations should be taken with a pinch of salt, to say the least. What is useful on the monthly time frame, as you can probably imagine, is of course the monthly open, right? Because the monthly open gives us an idea of how the monthly time frame will develop as the month goes on. So obviously, if price drops below the monthly open, the monthly candle itself will turn red, and if it starts trading significantly below the monthly open, you kind of get a peek as to how the high time frame candle is developing without having to wait a whole month for it to close. And this sort of stuff works across all sorts of high time frame opens, like monthly open, weekly open, daily open, etc., etc. Maybe a video for another day. I've got some articles on that topic, but I think, long story short, on the monthly, in terms of levels, all that kind of stuff, really, I don't feel comfortable coming to any conclusions, which doesn't make any sense, but I do think we've got a nice monthly open to work with to keep track, if you will, of how the month of February will be developing. So that's cool. On the weekly time frame, it sort of just encapsulates the chop that we've all been feeling, because not much has really happened. In a similar vein, we're quite far from any type of technical structure. Even if you're generous, really, even if you want to be conservative, which I have been on the way up. Like, I was happy to use this as a level, and there's really not much going on there, right? But looking up here, apart from the range itself, which we'll revisit in a moment, if we're looking at historic levels, it's really the all-time high that's the first thing we've got in terms of past price action informing present price action, and otherwise we have to basically deal with this consolidation, which is better defined on lower time frames anyway, in my opinion. But on the weekly time frame, what have you got? I mean, you've got arguably resistance at the highest close here, and then support at the lowest close. That's our weekly range. We had a swing low formed recently here, and I'm sure you can make case for a swing high more or less being formed here. There's really not too much. Again, you'll have, I think, early commentary saying, oh, well, this is reaccumulation, this is redistribution, or distribution itself, or that type of stuff. Not hugely useful, in my opinion, especially if you want to be really precise. That kind of stuff needs certain volume confirmations, which isn't something I look at anyway. But the long story short for the weekly is consolidation. It's not even a long consolidation in relative terms, but if you want to be broad brushed with it, we can use the lowest close as support at 31, 32k or thereabouts, and the highest close as resistance at around 38k. The reason I haven't got those levels on my actual lines on the lower time frame chart is because this is, as you'd expect, exactly what lines up on the daily time frame anyway. So I try not to clutter my charts if they don't give me any more information, context, or new things to work with. But for those of you unaware or trying to read into the weekly time frame, I really think, being conservative, this range is all you're going to get so far. Daily time frame is where we actually have some structure to work with, and it gets reasonably interesting. So to be clear, I like to start with the big blocks, if you will. No pun intended, because I'm going to draw some triangles, but for this to be bullish, or to get quote-unquote bullish confirmation, which for me would mean a shift from a ranging environment to a more trending environment, which is generally easier to trade. You don't even have to technically trade it if you have spot exposure to Bitcoin. It's just number go up. But broadly speaking, for me, breaking out of this consolidation would most likely be characterized by a higher high on the daily time frame. And in my view, the most compelling area to do that would be above 39k, essentially, which is this last lower high, as we've covered on previous live streams. So if that happens, you will have had a lower low, at least relative to here, into a higher high, which is typically pretty bullish, anyone who watched the market structure video. And then the all-time high is unlikely to provide any meaningful resistance. I know that sounds hard to believe given what ETH looks like, but that's still kind of my working assumption. And then higher prices from there, some sort of ridiculous double bubble. And again, in price discovery, you kind of have to use, I mean, you could use option strikes, you know, maybe funding in the short term, although again becomes slightly less useful in price discovery. I generally just like using round numbers, as ridiculous as that may seem. I mean, I don't think it's a pure coincidence that the turning point on a high time frame was around 40k, which was also a 2 times from the all-time high break. When market participants are stripped of their regular tools, we kind of go back to the Stone Age, if you will, and use pretty basic stuff like round numbers or things which are intuitive and make sense otherwise. So we will dive into the more granular price action stuff, but for anyone with a slightly kind of zoomed out view or waiting to resume trading in these types of circumstances, which were obviously a lot more pleasant and easier to trade, to be honest, even before that, for me, that needs to be characterized by a higher high, a clear higher high on the daily time frame, which would basically be through here. Okay, where are we right now? It's actually a pretty interesting area in terms of the technicals. I think two levels matter. One is this good old cluster consolidation support level, whatever you want to call it, at around 33k or thereabouts. Sometimes you get this with levels where one side will do its job very nicely, like one end of the cluster, which is the top end or resistance. You can see it was resistance earlier, and then it's flipped to support quite nicely as well. The lower boundary, less so, right? You had a close, no bearish retest, close, no bearish retest, etc. So there's buying going on below this structure, but the upper boundary is happy to kind of do its job. What I think you could also reasonably do is just to kind of move, adjust with market structure. So, for example, use this as the range high level, and then this as the range low level. In fact, I quite like that explanation, so I'm going to do... Oh, well, I pretty much got that already. So there we go, I don't even need to do that. Sometimes I'll just have to adjust my charts as price develops structure. So, for example, this cluster was fantastic on this retest, right? I mean, A+ type of entry, 30% down, etc., etc. But if the market wants to prove to me that it wants to use more recent price action to kind of pivot off of, I will certainly, or pivot from, I won't be one to object. So I've already done that, you can see on my chart, with the range high roughly lining up anyway, and this daily plus intraday range low coming in at 30k, and that's sort of where the market's chopping right now. So what do I mean by chopping? Well, it's stuck between two pretty good levels on the daily time frame. One is this market structure level at around 34k. So this is low, high, higher low, lower high, lower low, okay? And then the previous kind of higher low level before it, before market structure was broken, is acting as our kind of resistance, chop zone, whatever you want to call it. So I think that level is important. That's where the sellers seem to be active and stepping in. And where are the buyers stepping in? Well, either at this cluster range high, or if you want to ignore this and simply use, if you want to ignore that and use more recent structure, it sort of lands in the same area, this range high. So in terms of Bitcoin, why is the daily range so sucky? Where's the volatility gone? I think the market's just, well, two things. Purely in terms of technicals, the market's stuck between two quite good levels, right? This is a good daily level, makes me happy. This is a good daily level as well. Also valid, and neither has kind of given way at the moment. That's what you get when support close to price does its job, but resistance close to price does its job, so to speak, as well, right? So that's reasonably straightforward. The second is less technical, more general, I suppose. There's been some indecision and, you know, a couple of trade setups that have probably injected, if you will, a bit of uncertainty in the market. I think the clearest example is basically this trading day here. We had the options expiry into Elon changing his bio to say Bitcoin. You had a lot of momentum picked up early in the day. I think that was the morning UTC time. And then by the time the US came in to trade, I think a lot of us were waiting for some sort of news, some sort of confirmation. You know, where is it on the spectrum of Elon is trolling on the really shitty side to Tesla is buying Bitcoin on the really bullish side? And of course, the answer was neither. It was a bit of a nothing burger. It's kind of, for those of you who listen to the Clubhouse discussion, if you will, I think Elon just said he likes Bitcoin and, you know, generally positive comments, but nothing on of the sort of magnitude that people were expecting. So understandably, I mean, even before the Clubhouse thing, this move got retraced when there was no follow through, and then the market's kind of been indifferent since that point. So that's kind of where we are with Bitcoin, trapped between levels in a market that's kind of recoiled a bit at that uncertainty and hasn't really done much since. I am happy to map out scenarios where I think the reasonable trades may come in and where we might get that volatility injection one way or another. You'll recall that the upper boundary of that daily resistance that we're stuck at is at around 34k. And if we look at that level through an intraday lens, we can essentially, where am I? Yeah, if we just do something like this, right? You have the pre-breakdown support, resistance, and something I picked up from Trader SZ way back in the day, especially when he used to map. I mean, he still does. Hadn't been there in a while, but when he basically looked at forex charts into news events like non-farm payrolls or ECB, Fed, whatever, high volatility injections or high volatility events where market makers would deliberately, of course, widen spreads in order not to get rolled over by smarter participants, right? Adverse selection, all that fun stuff. You'd often get this type of price action as the market reacts to the news and the early kind of bits of the speech, headlines, whatever, and then eventually price would settle down. So you'd get your big move as the market plows through wide spreads in one form or another. And the resting orders from price are a bit further, so the market has to reach for them in one way or another. But once the proverbial dust settles, you're kind of back to business as usual. And I think that works quite well for this Bitcoin chart. If you basically ignore the pump and dump of Elon announcement buyers buying it up, no follow through, and essentially the momentum trade getting puked. So if we kind of ignore this, for lack of a better term, we're sort of left with the same reasonably technically clean range, right? We know this is a daily level, roughly around 34k or thereabouts. That's currently acting as resistance. On the high time frame support side, we've got the bottom of the range more or less at 30k. We've had some pokes below it, but again, no kind of bearish support resistance flip there. And then in terms of monthly open, weekly open, daily open, etc., which can act as a level and has done a good job recently, it more or less, doesn't have to be perfect, but more or less lands in the middle as well. So if you just bear that in mind, range high, daily at around 34k, old support, resistance, ignore, and still acting as resistance. So that's cool. You've got the high time frame support at the bottom of the range, and then the mid-range is the daily level we discussed that's kind of capping price, but also we've got a high time frame open in this area as well. And you can see that pretty in a fairly straightforward fashion. So what would trigger a reasonable bullish trade? Well, I mean, if you want to be really conservative, I think in this case, the daily close would be not the worst trigger in the world, at least for short-term upside. Like, I generally don't like longing into these setups whereby you had a close above the level that looked like it was going to flip to support, but then the next day failed, right? That kind of excess portion, which should have flipped but didn't, tends to be the overthrow, the deviation, excess, whatever you want to call it, and then the level resumes its original role as resistance. So keeping it as simple as possible, I think a daily close above this structure at around 34k. For those looking for some sort of continuation setup higher, that will be reasonable to get out of the current hellish range we're in and see where the market wants to go. Trouble areas for that, I think, would be this point of breakdown at around 36k. But more generally, I mean, that same lower high area that we discussed earlier. For those on intraday timeframes or not wanting to wait for the daily close or whatever. Also, I love how people saying don't listen to YouTube while I'm here trying to live stream on YouTube myself. But yeah, I understand. Look, the crypto YouTube is really bad, especially when the market's volatile. A lot of these people know that they will get a huge influx of new viewers if they start live streaming and making like emergency updates, etc. And they basically, in one form or another, clickbait and take advantage of your emotions. And you're in an emotional state. You're watching them with their, shiny face cams and screaming into the microphone that this could pump really hard, etc. It's just a bunch of crap. So don't listen to it. Anyway, so for Bitcoin kind of intraday stuff, which would also align with the daily idea, I think taking this same level more or less, if you want to be conservative, the highest close of that level here, 34, 35, whatever. We know this is daily resistance. I think significantly clearing this area, so closing some way above it as opposed to kind of wick. It's quite clear where resistance is, right? So I think breaking that level fairly significantly on the closing basis, like at least 4 hour, there's a good chance that a lot of this dump candle gets retraced and the market trades towards some of these other lower highs that are present. So I suppose the most simple version of expressing that would be something like this. It would never, of course, look like that, but in terms of directionality, either way, a break of this current range high, there's a good chance that this whole dump candle gets retraced, and then it's a question of lower highs to the left. Okay. In terms of buying support type of setups, I think it's slightly less clear. I generally want to see for any kind of trending move higher, this area hold at around 32k. It's important in terms of market structure. Why? You had this leg up into a lower low that then got engulfed, right? It's that same setup we talked about where you get a lower low into a higher high. That tends to be positive, and that's where you usually get support formed. And also, perhaps slightly more importantly, that's where a lot of positions were accumulated, if you will, which preceded this big move up. So a lot of risk, if you will, was likely taken up in this type of area, and it's just an area where a lot of volume was transacted anyway, and that breaking would suck. This is your sport. If you want to buy a dip, potentially in here, again, not a huge fan personally. I took a trade in this area-ish yesterday. Not sure if I'd do it again. Continuation higher, smiley face. Support here, meh. And that's really all I've got. I'm not going to, have very strong views when the market's literally stuck in a range like this. I think the daily triggers and closes, etc., are a lot clearer. But just be aware of where the levels are. And if I just quickly load a permanent empty chart layout and just map this is our daily resistance, and more or less this is our daily support. You can kind of just see it on the intraday timeframes. Okay, nothing. This is where you get chopped while altcoins pop off, and then you allocate to altcoins, and then this breaks out. But yeah, I don't want to spend too long. Is that reasonably clear? Like where the range is, what continuation would look like, and the high time frame picture. This is your resistance. It's currently at resistance. This is your support. It's also currently at support. In fact, this daily candle has traded both to resistance and support in the same day. That's why it's so choppy and where the market is stuck. A break from this area would likely resolve this consolidation. To the upside, you more or less have 37, 38k-ish in the form of this consolidation. To the downside, you've got the 30k range low we discussed. I don't have a bias at the moment, simply because both levels are doing their job. Watch for one of them to fail, and that's when you know, or where the probabilities really shift for this consolidation to unwind. Hello, Cred. I came in to give the like and will enjoy watching this later. Thanks, man. Thanks, SK. Hope all is well. Perfectly clear. Okay, cool. I don't want to spend too long on something that's just stuck between two levels. So, can you make lessons? If you have any questions, by the way, just let me know. I'll try to pick up. Can you make lessons focus on intraday and swing trading if you have time? All the stuff that I make content on is totally applicable for lower time frames. So, technically, I have. Would you be watching this PA as a potential bearish SFP with a deviation above that upper range level? I think we've already had it to a large extent, right? For me, the real kind of deviation above that level has likely taken place. If we look at it on through a 4-hour lens, this same area, right? You've already had it. You've had resistance, big old fake out, back to resistance, back to resistance. So to be bullish, it just needs to break. Those of you who've watched this for a while know that I'm not a fan, or I don't really believe in double fake outs, right? So what I think is cool is when you get clear resistance, breakout, fail, and then the level acts as resistance again. So one fake out is absolutely fine. What I think is far less probable is when you get fake out number one, then the market comes into the level and actually breaks it again. So some traders will think, oh, well, look, it faked out last time, it's going to fake out again. Maybe, but it's just a lot less frequent. A lot of the time, once you get fake out number one, if it gets back above the same level, which already had a fake out, then it's not a fake out, it's likely just a break of that area. So that's kind of, this is the main structure I'm interested in on an intraday time frame, and that's it, really, for anyone looking to get long or whatever. So on the Ethereum side, I hope I made my video reasonably straightforward. I think on a weekly bias swing basis, whatever. Also, let me know in the chat if you watched the ETH video. Hopefully, yeah, probably did a better job than I will here. I know this level sucks, and I know Donald hates it, and he, but it's support, right? You kind of got to make do with what you've got. So for me, as long as you get weekly closes above this structure or cluster, the market still looks fine. That doesn't mean it can't come back and retest it or even retest the lower boundary. That doesn't look like much, but if it were to do that right now, from here, for example, that in itself would constitute another 7% move down just to retest support, for example, right? So, so worth being aware of. But as long as that's intact, I'm generally going to assume the all-time high is vulnerable, right? If that breaks, if that cluster breaks, then yeah, we can talk about some bearish targets, which for me tend to align at 700 or thereabouts. But as long as this so-called support is intact and we're close to the all-time high, I'm finding it hard to be properly bearish in those circumstances. Like, generally being bearish at all-time high doesn't make too much sense, purely from the point of view that all the asset holders, so to speak, are above water on their investment, right? They're up on their investment. The so-called natural incentives to sell are significantly reduced. So sounds pretty self-evident, but I mean, it is what it is. As for daily market structure, it's still, again, as per the video, looks fine. High, low, higher, high, higher, low, meh, high, higher, low. So as long as that sequencing, if you will, is intact, then I don't see a ton to worry about, as annoying as the shorter term conditions may be. Specifically, what would trigger... So I'm going to always assume, for the most part, when a market comes this close to all-time high, I'm going to assume it's vulnerable, right? So what would make me think that it's less likely to get broken? Well, if this weekly structure, that same weekly box we talked about, fails, right? If that happens, like daily close below it finds resistance, or just this area fails on a weekly basis, at that point you've got a lower low on the daily and likely a break of weekly support as well. And at that stage, you just kind of, your targets end up being quite straightforward. You've got this previous low and monthly level at 1.1k, and it's kind of just 1k generally. You get like a lot of range low type of stuff aligning at that level, not to mention the quote-unquote psychological support at 1k as well. But then again, if that's the real breakdown shift in market structure, really good chance that this gets filled into the quarterly level close to 700 as per the video. But as long as support's intact and, you know, 3 tests of the all-time high and still grinding, I don't have any overt reasons to turn bearish above support and below the all-time high. Just doesn't make an amazing formula for bearishness, so to speak. And just to be clear, when I say this level, now yes, sometimes I will trade like at the level itself or with limit orders, etc. Like, as crazy as it may seem, this period of trading was really good for me because I more or less kept positioning into weekly support and then closing the thrust candles on the hourly that came off of it. So sometimes, yes, when it comes to high time frame levels, they will more or less work quite nicely on lower time frames as well. But bear in mind, this is a weekly level, so you've got to give it space. Like if it comes in, for example, you know, spikes this low or even this low and trades closer to 1,200, that doesn't necessarily mean that the weekly level has failed. What if this is the weekly wick and then you actually get a weekly close like above here? So it's always worth anticipating more volatility and more quote-unquote violations of the level if you're trading higher time frame structure on lower time frames. So what I see a lot of just, I don't know, I suppose less experienced traders do is they have this on a weekly time frame, right? But then they'll put their stop like literally just below it or on the level itself, saying, well, okay, 1230 is weekly support. If support breaks, I don't want to be in a long, so I'll just put my stop below it. Well, that doesn't make any sense because you're essentially saying to the market, hey, this is a weekly area, right? Weekly. But if it doesn't react absolutely perfectly to the cent, then my trade idea is wrong. And of course, if you're in a long and you put a stop order, you need to close that long. That's an order to sell, right? And if your stop loss is here, in effect, what you're doing is you're selling weekly support, or you're selling where the weekly wick is likely to form at support. So it's always worth kind of reining in your expectations, so to speak, when it comes to the perfection of weekly levels or higher time frame levels viewed through a lower time frame lens. generally. Does that make sense to anyone about weekly structure and kind of being reasonable? Hey Cred, could you and Scott talk and figure out different times? I'm not sure what you mean. Could you clarify? Okay. And yeah, as for the other ETH stuff, beyond the daily and the all-time high, I don't really have a whole lot else. It's even slightly less clear on the intraday timeframes than Bitcoin, arguably. Are you really Cred? No, I am an imposter. Just love his TA videos so much. I've built my life on emulating how he speaks, how he charts, what he does, and I think I'm doing a reasonably persuasive job. So the only other thing from an intraday time frame that's okay for ETH, I think, is pretty much this area of prior lows here. If you might be a bit generous, I can do the whole if it goes up, you know, if it goes up, it'll probably go higher, but that kind of TA is useless. Being real with you, for the most part, the trades I want to take are above this all-time high cluster here for bullish continuation and getting on board like a high time frame trending move higher, or I will do or die get involved around my weekly level to play some sort of bounce. This for me is where I probably lose money and have a far less enjoyable time trading. So to be clear, yes, there is, I'm sure, intraday alpha, whatever, some stuff to be interested in, but the trades that I'm interested on putting actual size on and taking some risk as opposed to just gambling, right? Do or die, buy nuke around 1230, 1200, let it wick, etc. But kind of, if it doesn't bounce here, the market's going to zero. I love getting involved in those important areas. Or the all-time high break, at least on a daily basis. Because I got involved on this one, that wasn't fun. And it looks like every single daily close so far has been rejected. So even if it closes like up here, I still think if my target for ETH on an all-time high break is 2k, 2.5k, whatever, like a high time frame trending move, the bigger the move, the less precise the entry. So I'm not going to beg for a retest or for it to come back, wick, do whatever. If it breaks all-time high in a way that's persuasive, which every other time hasn't been, that's good for me to get involved. Anything else is bleh. It can really change on a dime. So yeah, does that make sense for ETH? Let me know if I missed anything. If you have any questions, that would be cool. You and Scott always stream at the same time. I see. If you'd like to go watch Scott, you may go watch Scott. And I think, although I don't know, both of our videos remain replayable. So replay them. But I have no interest in adjusting my time schedule. So apologies for any inconvenience. Any videos on effective way of taking profits? Yes, I've got a full video on my Crypto Cred channel titled FTA, or First Trouble Area. There's a really, I think, robust framework for profit taking in that video. So, yes. Okay, so ETH seems to make sense. Okay, yeah, there is some intraday stuff, support, resistance, flips, etc. If you want to trade that, awesome. From a high time frame point of view, give me the all-time high break, or make me beg for mercy buying support at 1200. Anything else is slightly less interesting, but also likely to go out of date by the time you may be watching this later, and I just want to keep these as valuable as possible for those watching later. Kevin says, does a break of resistance always retest that level for support? Absolutely not. There's this weird idea, and again, I'm not picking on you, Kevin. It's just it's a good question to bring up. But there is a common misunderstanding that when a market breaks a level, it's under some magical obligation to retest that level before it's quote unquote confirmed as support, right? And that's just simply not true. If anything, some of the best breakouts just never come back to retest the level, and if they do, it's much later. And you could just end up getting trapped in some terrible trades or missing some otherwise good opportunities if you're always requiring that the market comes back. So the weekly chart here actually presents some pretty reasonable examples. So if we take this level here, and this goes all the way back to this support, this kind of 11k area or thereabouts. So let's kind of assess the framework of retesting a support to prove confirmation or one thing or another, right? So you've got old highs, old lows, old highs, really clear resistance, really clear resistance. There you go, you got a break above the level, and you even got a retest of the level. So that should be confirmation that the market is bullish, and the next week, it just takes a massive shit, right, into another area of structure. So, and you can view this on any time frame you want. The idea that just because a market breaks above and comes back to a level is no guarantee that it's turned to support. Now, yes, that does trigger sort of good trade ideas in terms of risk reward and trading at. I prefer trading at structure as opposed to away from structure, so that's all important, but that's just to show that, and again, this works across all time frames, blah blah blah. There's no guarantee that price coming back to a level is proof that it's been flipped, right? That's important. And I think another example of this is, of course, the Bitcoin all-time high break, which is the red level here. I'm not fighting with views for Scott. I'm not fighting for views with Scott, Iceman. I've been streaming at this time for like a year or however long it's been. I'm not interested in the amount of viewers per se. If you want to go watch something else, be my guest. But I really, it is not my primary concern, and I'm not adjusting my schedule. So perhaps raise your complaints elsewhere. But yeah, as to the point of a retest, right? Let's say you're reasonable and you say the all-time high break is a bullish signal. You get that all-time high break on this daily close here. So what are you doing next? Are you waiting for a retest of 20k? You may be waiting for some time, right? So technically, the idea of resistance being broken happens on the daily close or whatever candle close above it. Whether the market pulls back, right, or just keeps going higher, you don't know, and it simply becomes a question of kind of risk-reward. For a lot of it. So for example, if it were to come back to the level, your risk reward is better or optimized compared to just buying the close on the breakout. But at the same time, it's no guarantee that it will come back. So there's no easy answers here. It really depends on how you trade. For me personally, with something like an all-time high, I don't really care for a retest. If anything, it coming back to retest kind of scares me a lot. So I'm happy to breakout trade there and kind of see what happens. And you also need to consider the overall context, right? So for example, let's say this is your all-time high level here. And up here is the next level of resistance before all-time high. The market comes into the level and then breaks it and closes above here, right? So this is the candle close, so to speak. Now, if your target is all the way up here, does it really matter whether you enter on the close, slightly below, if the market dips a little bit, if you enter on a retest, you're basically arguing over this much when you're looking to capture this much. It really doesn't make sense. I think when you have a clear idea, a clear high time frame idea with a lot of space, most importantly, the precision of your entry is far less important than it would be otherwise. So like if you're trading like a lower time frame range or rotation, and you've only really got this much space to capture, then yeah, it matters whether if you're trying to buy support, it matters whether you enter at support or kind of closer to resistance. You've got less on the table to go after, so that has to be reflected in the precision of your entry. But if you're capturing or looking for these massive, massive trending moves, I think it's unwise to lock yourself out of a trade generally, leaving this much discretion on the table when your upside is essentially that. And I think a similar thing applies to ETH, at least for me and my framework. I'd rather pay up for a breakout in anticipation of a trending move higher, rather than watch a breakout and then think, oh, well, it should pull back, it should confirm, it should flip, etc. I think it's just far less important, And certainly it's no obligation for the market to pull back to a level. Like, that logic also just takes you to really weird spots. Like, I mean, waiting, it's not necessarily a bad thing, what you're saying, waiting for a long entry, but I think context matters, and you need to assess what it is you're trying to capture. Like, if the trade simply doesn't make sense if you don't wait for a breakout, then some trades are just missed trades, right? So for example, if you have a level here and then your next level of resistance is here, and the market comes into the level and like closes all the way here, Well, it doesn't... I mean, yeah, you could buy the breakout and you've got resistance here, but then risk-reward-wise, you're like... What? You enter here, your target's here, and your stop is like below the level. Doesn't make any sense, right? So context is really important. It's like, yes, the breakout is significant, but does it still make sense for me to get long this market? Considering where my target is and where my invalidation is. Sometimes it makes sense if there's a lot on the table. In other cases, it really doesn't make sense, and you kind of just have to treat that as a missed trade, you know? So kind of exercise your discretion a little bit. Bitcoin pumping. Yes. I mean, into the same level, but yes. So I want to talk about XRP. This is called the delayed Christmas tree pattern. So due to supply restraints and logistical difficulties, Santa Claus had some issues and was a month late. So the XRP chart, which is logistically tied to the elves and the sleigh output, is, you know, I don't know what the fuck I'm saying. Basically, there are a lot of narratives floating around XRP, like, oh, it's a pump and dump, oh, it's this group doing that, SEC, etc. It really doesn't ultimately matter. It won't make a difference. I'm quite skeptical of the pump and dump narrative generally, simply because of how much it would take to push this type of thing around to this extent. But ultimately, I think it's a waste of time. I wouldn't be a huge fan of trading this in current conditions. I know some of my friends are taking advantage of the volatility, and you do technically have a range low at 37 cents or whatever. But I feel like when it's put in a daily range of, I mean, look at the size of this candle, right? Even just from, even just off of the open, if you go from high to low, etc. This is not. I don't like standing in front of this sort of stuff. So I would wait if you're bullish XRP. See how this kind of thing revolves. What I think is a reasonable litmus test for those of you who actually have an interest in being XRP holders, buyers, investors, whatever. And, you know, I don't really mind or have any strong views. Although not a huge fan personally. That's not really what's important here. There is a nice level, and has been for a while, at around the 30 cent mark, right? It was an old floor here. You had resistance, resistance, resistance. You had the rally through it. And then I think this was the SEC dump, if you will. And then the market got stuck at that point. And now it's expected to be support once again if we get back there. I really think that's the litmus test. Maybe even include this consolidation. But generally, the 30 cent area, more or less on the weekly. I think that's your litmus test to see if this is just a pump into full retrace or if there's something here. If there's something there, there's a good chance that buyers will actually step in front of a candle that looks like this. The reclaim of 30 cents would be significant. And then, I mean, targets for this thing are really hard. I think the BTC pair is pretty important. And also you can just see it just goes up a lot and goes down a lot. So I don't even know about swing trading. This instrument may not be the easiest thing in the world. Like a lot of these impulsive candles, don't last. And if we just look at the USD pair generally, I mean, this is kind of a range, right? More or less. It's not exactly a trending instrument. Certainly compared to a lot of the DeFi stuff, it's not something that's straightforwardly making higher highs and higher lows. So we've almost come full circle to how we discussed XRP around the SEC lawsuit, that there are much clearer opportunities in the market, and those that are offering trends without the crazy volatility to stomach either, or if there is volatility, it's mainly to the upside, as we'll see in a lot of these. But if you do happen to care, I wouldn't be chasing it on this daily candle here. A weekly close above 30 cents, you might see a couple weeks more upside, but be aware of the general context that the USD pair at least has been range bound for some time. And I think if you like to trade altcoins, they don't always trend, and they don't always trend cleanly. A lot of the DeFi stuff is. So that certainly has my attention, rather than more or less getting involved in this, right? It's about kind of opportunity cost, what's clear, etc., etc. Long story short, a litmus test. By that I mean just to see whether something works or not. What do you think about Doge? We'll cover Doge. Do you do macro charts? I see some traders pick the last 10 years logarithmic and they draw a curve. No, I think that's all bullshit, frankly. Made up techniques, Bitcoin 5-year projection, stock to flow, rainbow chart, fiction crap, really. Wrong channel for it, to be honest. So yeah, that's XRP. On the Bitcoin pair, still some progress to be made. Just being aware generally, I think high time frame trends are important. This thing has been more or less trending down for quite a while against Bitcoin. And the rallies that it has offered, like for example, this leg up here was really positive. They've not been trend reversing recently, right? So even when you do have market structure breaks and stuff that sets up quite nicely, it hasn't materialized to reverse the high time frame circumstances more generally. I mean, this weekly candle hasn't closed, but arguably this is just a retest of the underside, blah, blah, blah. I just don't love the trading opportunity presented by XRP. I'd much rather get into something trending, first of all, but second of all, also trending up or looking strong against Bitcoin or against the Ether or against one of the majors, etc., etc. What is your major in school? I have a Bachelor of Arts in Technical Analysis from Peter Brandt College. And then I got a master's degree in making shit up from the University of Google. I'm starting my PhD program in as soon as COVID is over. I do want to give a bit of an update on my watch list. This is something I didn't know. You could actually split it up into sections, which is really cool. So if you right-click and on any of this, if you right-click and add section, you can get these little almost page breaks in your watch list. So for me, the way I've split it up, you don't need to copy this. I actually advise you don't. But I've got majors, which for me is Bitcoin, ETH, BTC. I've got dinosaur alts, not all of whom are dinosaurs, but just kind of older altcoins or non-DeFi altcoins is probably a slightly better title than this one. But basically, you've got your XRPs, your Litecoins, your Cardanos, your BCHs, Stellar, EOS, Dogecoin. I've also added Atom, although it doesn't really fit. DeFi altcoins are next with a slightly expanded list to the previous live stream. Link, Wi-Fi, Dot, Aave, Uni. I mean, I'm sure you can read. The main additions have been 1inch, Rune, Comp, Curve, Kusama, and BAL. And then for the exchange coins, I've got BNB, FTT, and then some other Sam stuff. The CEO of FTX and Alameda Research, I think, which is Sol and Serum. And then some stuff at the end with legacy and indices. I've got Euro USD to track dollar strength, gold, silver, the S&P, Tesla, GameStop. This is an interesting one. This is the DeFi basket against Bitcoin, which is a cool one. And then just Bitcoin and ETH derivatives there as well. So yeah, Hajime, for instead of just having the dollar index, the euro is inversely correlated with the dollar. And it tends to have slightly cleaner charts, technicals, whatever, as an instrument that's kind of traded as well. So if I want to get a sense of dollar strength, I'll just look at dollar weakness, Euro USD weakness, excuse me, instead of just looking at the XY chart, so to speak. I do want to talk about Dogecoin as promised in the title. So let's look at Dogecoin. First things first, against USD, I think I can find a longer chart than this, can't I? Surely? No? Was it that new? Right, now we've got good old Poloniex. Now, what I will say is Dogecoin USD as a tradable instrument is far less established, and in my opinion has significantly less significance. Are you still working on the derivatives treaty? Yes, I am. I just think the USD pair is cool, but the BTC pair is more important from a kind of cyclical or establishing cycles point of view. So obviously, if you're trading this on futures for whatever reason, you'll probably be using the USD pair. Whether you can pass this range and make money within it, I mean, be my guest. I certainly think the more manageable part of the trade, which was essentially catching the impulse and not giving it all back, that seems to be complete. I could, of course, just start adding levels to this thing and show you support, resistance, etc. I just don't think it's worth our time, to be completely honest with you. Not up here. And some of the swings that this thing puts in, and you had like funding being maxed out, etc., etc. It really is something. Like, you can even look at some of these tiny moves, which look relatively benign on the lower time frame candles. These are like 15 to 20% swings for some of them on candles that look completely inconsequential. So this is kind of how you lose your futures account potentially. So slightly less interesting in the USD pair, especially when we look at some of the DeFi stuff. You'll see that in terms of the clarity that's offered by those pairs versus something like Dogecoin, it's almost not worth allocating your capital or diverting your attention in that direction. What's interesting is the BTC pair. Again, I think it tends to be a bit more of a driver in terms of the cyclical behavior. So one very interesting question I got was, do you think Doge is in an uptrend now? And my answer is, I don't think Doge trends, right? If we just kind of look at this thing, it doesn't trend. It goes from cycle high to cycle low, cycle high, cycle low. There's no kind of multi-week, multi-month, whatever expansion beyond its boundaries for the most part. Now, could this be the one that sends it into a trend? I mean, sure. But probabilistically, can I make that assumption, or do I have good reasons to make that assumption with what's currently in front of me? I mean, the answer is no. It would kind of be the good old, this time it's different, and then not have a reason to back that up. So I think a lot of the bullish Dogecoin views are understandably based on this impulse up, which completely crushed, and then they're waiting for basically like almost GameStop, to keep doing it for weeks or for an extended period of time. Whereas I just kind of look to the left of the chart and see that this thing kind of never trends. And so assuming that this time is different, I'm sure people thought kind of this was the trend forming run, this was the trend forming run, this was it, etc., etc. I just don't like my odds of betting on a break of a multi-year range in the complete absence of evidence for that being the case. So if you want to short-term trade the USD pair, be my guest. I'm not going to, and also just watch out. Generally, those smaller moves are actually bigger than you think. On the BTC pair, is there good evidence to think of a... I mean, look, it could even come in and fill in some of this wick, right? And there may be some capture left there. But from a high time frame point of view, the bulk of the move, the bulk of the money, so to speak, until proven otherwise, or until there's really good reason to think otherwise, it was complete on this weekly move here, which of course eclipsed a lot of the previous cycle highs as well. So until I've got a really good reason to think that the literally internal range is going to break into a trend, I'm not going to pursue this until it goes back to the cycle lows, potentially. Hearing criticisms, Doge will never be a real coin, correct. Initially created as a joke, also correct. Founder still doesn't seem to be taking it seriously. It's not that the founder doesn't take it seriously, he actually hates it. He hates Dogecoin, which is hilarious. He's like the one person on the internet who actually dislikes this coin, and it's his own project, right? Jackson Palmer. So I don't think it matters whether it's a real coin. We have seen the market be a bit more selective in terms of which altcoins or which sectors of altcoins have performed well towards the end of last year and this year, whatever. But ultimately, the whole real coin thing doesn't really matter too much in my opinion. But for me, in my heart, Dogecoin is a very real coin, and that's all that matters. But yeah, long story short, USD pair, maybe some crumbs left on the table to trade, but not the most attractive opinion or option in my view. On the BTC pair, given this thing has literally ranged for all of its life, I'm not yet comfortable betting on a trend as opposed to just some sort of chop, whatever, and then revert back to what it's been doing for literally years and years. Okay. As for the DeFi updates, so Link is a popular one. So with regard to Link, this is an interesting kind of case study in terms of the all-time high sort of thing. So this is one which broke its USD pair all-time high, but then really hasn't gone anywhere since then. I mean, yes, of course, there's some space between the breakout level and where it went, but compared to Bitcoin, compared to Sushi, Uni, etc., it's not really the high time frame trending move that a lot of people would be waiting for. I think for Link generally, and I like trading at structure, so my bias is always going to be that way. If it pulls back, or DeFi pulls back, or whatever the catalyst is, I'm comfortable to trade near the all-time high level itself as a kind of do or die type of structure. Adjusting for volatility, and this is something we've got in the Technical Roundup newsletter, I think we've got this level here as well. So about, you know, $16 with the all-time high coming in at 18 or thereabouts. I know it's a bit of a wide range, but broadly speaking, if this thing is going to continue into so-called price discovery, I'm happy to do business at structure simply because of how close invalidation would be, anywhere between 16 and 18 potentially, again, depending on how it sets up. I think if you're holding this generally, the less time it spends near or around all-time high, the better, right? For the most part, you want to see a break and then for price to like double, essentially. This is kind of inconclusive at the moment. As a speculator, if it wants to come back to structure and let me do a kind of do or die punt, I'll take it. And if it doesn't, then I won't. But from a high time frame point of view, I think realistically, this structure is good for wicks, right? But any candle which meaningfully closes back below the all-time high, right? Let's say something which looks like this, or, you know, bounces off this support and still looks like shit, right? Any break back below the all-time high is just not evidence of strength, right? Because at that point, of course, all the breakout buyers who took up positions on the break of the all-time high anticipating price discovery, they're going to be feeling a lot of pressure, if not liquidation, stopped out, etc. And look, a strong market when it breaks out often doesn't even retest, let alone fail when it does retest. So this would kind of be the red flag that the range trade has failed, and then we could interpret it in the following lens. This is the range high, this is the range low. If for some reason the all-time high fails, right, it closes below, this would be the excess, right, back below the range. And when price, you know, if this is our range, if price breaks from one boundary, comes back and fails to find support, then you generally target mid-range, but the opposite side of the range as your kind of larger expectation. So if for some reason all-time high fails, which really shouldn't happen if the market's bullish, then bounce area is the midpoint, and then all the way back to the range low, which would just look something like this more generally. So yeah. And again, this has support now, right? Just to be clear, that this is kind of where I've got support for Link in terms of immediate structure, 20 to 21. I can tolerate higher time frame wicks lower, but it's one of those, like, if the market's so strong, why should it go to lower support if it's got support up here, right? So I've got this. If it doesn't bounce here, meh. Again, happy to do a kind of do or die punt at the all-time high. If it fails the all-time high, then we've all been bamboozled. Draw more support for Link, yeah. BTC pair, I mean, Donald can talk about that. So YFI, I still think is super interesting. The narrative around it is unfortunate because this is definitely one of the leaders still is, I think, in terms of usage and technologically and clout, etc. It's still really important to the DeFi ecosystem. But they had some questions, I think some governance related, if it can be called that, concerns when price started chopping. I mean, I think the lead dev, was tweeting a lot and wrote a blog post about misaligned incentives, and then the community started discussing, well, should we lift the cap regarding the supply, so basically sacrifice some of that scarcity and mint for the team in one way or another, and basically, scarcity being it's not supposed to be a store of value, right? And so the trade-off that was being discussed is lifting the cap and minting sort of a dividend of sorts or something for the team as an incentive, and then the project would be better off, now create cash flow, etc., etc. Test and prod, yeah, all that kind of stuff. But long story short, things got a bit dicey during this range, and it was, the overall supply and the direction of the project was far less clear. And as a result, it lagged behind a lot of the DeFi stuff, which just went mental and kept trending. But I still think, fundamentally, there's nothing wrong here. And it certainly held support around the mid-range, which for me is around 26, 27k, this old breakout level here. I think I'm taking like an Ethereum-esque approach to this trade. I'm not going to rebuy the range low again, simply because I don't want to. But I think if we take this kind of top range high candle at around 35, 37k, this thing has been coiling for a while, right? It's been ranging for weeks now. I think if we get a break through the upper boundary or whatever of the range, 37, 38k thereabouts, which funnily enough is also the Bitcoin lower high level. I think once this thing, or if this thing starts trending, it can really do a lot of damage in a short space of time. So also from market structure point of view, you've got a high, leg down into a lower low, right? High, lower low, and if that then makes a higher high, right? You know, this is the pattern that I'm a big fan of. A lower low into a higher high tends to be a good kind of market structure predicated catalyst for reversal. We've got some technical resistance in the same area at around 35, 37, coming all the way back to this previous range high. So if that goes, I think the lid really gets blown off this thing for a higher time frame trending move. But no appetite for that at the moment, but that's certainly the trade that's in the back of my head if we start closing above resistance. Disappointing, yes, but I wouldn't rule it out completely. Nothing wrong with the project per se. Oh, hi Luke. I hope it's Luke anyway. We've had some fake friends and accounts come in, etc. Dot, similarly anemic. It's been respecting these clusters. We will get the sushi. I mean, you can bloody see it in the watch list. Dot has been one of those which likes impulse, consolidate, impulse, consolidate, impulse, consolidate. And when it's come back to those consolidation levels, it's just behaved quite nicely. So this was the macro breakout at around $6, which even came back slightly, but you know, really where this high time frame consolidation was resolved was on the break here. And then since that point, it followed that impulse consolidate structure, found support at 8 to 9 on the dip. And then the next or nearest cluster is at around 14 to 13. So in a similar vein, I think I'd be looking at least if the market sets up appropriately and the overall context doesn't look shit, etc., etc. You know, if the stars align, to take a generous phrase, I'd want to see a test of support here, ideally the lower boundary at around 13k, right? And you can see you really do need to give it space because these structures aren't going to work perfectly and you do need to account for a wick. So it's the same old lesson. Don't just think, okay, this is support, so I'm going to put my stop like a tick below it. Not quite how it works. But generally on a daily closing basis, as long as 13 to 14 holds, I'm going to assume continuation. In the meantime, it's just been a bit droopy. It's been range bound and kind of headed lower, so then I might get a test of this, but that would be my do or die type of level at around 13 to 14. It doesn't look like much, but from high to low, testing even the upper boundary is like a 25% pullback, and to the lower boundaries a 30% pullback, right? So that would be a sizable move, as insane as it looks on, or as insignificant as it may look on the daily. And of course, if the lower boundary breaks, it'd be a kind of get out the way, because my next support is another 20 to 35% away, and that's not a haircut I'd be willing to take. Aave, this thing has just been going up a lot. Yeah, I think I'm reasonably comfortable adding this structure here at 265 to 250-ish. But yeah, this thing's been accelerating, right? We wrote about it in Technical Roundup fairly early on. Yeah, at least in relative terms to where the market is now as well. I think we were... It was either around here or around here, in one of these, within this structure. But this is one of those as well. What you want to see with altcoins, and especially now, maybe compare it mentally to XRP, is you want to see things that are trending very strongly and have a sort of recurring pattern from which you can derive directional bias. So in this case, like when was the last, like support, these clusters in a similar vein, or just these breakout levels, have been holding as support, right? Held here, cluster breakout doesn't fake out. This bit of price action is really interesting. I wouldn't blame you for example, cutting the trade on this breakdown here, but then of course the market gives a nice little engulf and kept going higher. So until you see a break in that type of pattern, so basically high time frame support being broken, I just think with a lot of these trend following strategies are just better than most other things that are available until the music stops. So first kind of dip support pullback type of thing, more or less at 250, 260. If that fails, it's one of those things where I probably wouldn't rebuy the next support and just wait to see where the dust settles. Because what you see a lot in markets that trend strongly is it's not the traders that don't sell the top that get fucked. It's those who keep buying the dip after the top is in that get fucked, right? So for example, you know, you've got, let's say the market looks something like this. You know, breakout, comes back, holds. Breakout, comes back, holds. Breakout, you know, comes back, holds, etc. So the market's being really consistent in its behavior. And then at one point, it comes back. So, you know, it worked here, it worked here, it worked here, it worked here. So at this point, you're thinking, okay, well, this is quite reliable, right? I can reasonably expect when broken resistance is retested as support, if it works or when the market goes there, it's a good buy. So the issue creeps in, of course, when that pattern fails to play out, right? So it worked, didn't work at this stage. The traders who get out with their skin, right, and don't get carried out of whatever shop or from their home office, whatever, are those who, for the most part, recognize the change in conditions and say to themselves, okay, well, this pattern that I was relying on is over, so I'm going to wait for either like a deeper pullback to something significant that's left untested, or I'll actually buy back on a breakout and pay up for an entry because I'm comfortable doing that. What happens to shitty traders is they basically get an exit signal here, but unable or unwilling, it's also ego-based a lot of the time, to recognize the shift in conditions. They'll buy this support, they'll buy this support, they'll buy this support, they'll buy this support, they'll buy this support. Meanwhile, the market will just essentially reverse, right? So again, the folly is not in missing the top or taking the trade which fails. That's fine, that's normal. The folly comes in not recognizing that the pattern is over and continuing to treat it as if market structure or the same bullish preconditions are intact. So it's worth recognizing when those change and not being left holding the bag or coping at every single level, you know? So, yeah, that's, I think, the important point there. Uni just looks insane. Stairway to heaven type of deal. It's quite unbelievable how this kind of listing high breakout, I mean, 200% since then, just really, really, really strong. And it hasn't come back to retest a lot of these, even daily clusters that are formed along the way. So again, this is one of those trend following ones where it's probably going to keep going until such a time that support breaks. And when it does, let the market show its hand before diving in and buying the first dip, because I think the dip needs to have context to some extent. And it's the same logic. If something's been working on the way up and then suddenly it stops working, it's probably worth taking a little step back and seeing why that is the case, and if the market's going to resume business as usual, or whether you'll get a significant discount on what you're used to. So that's kind of Uni. Sushi in a reasonably similar vein as well. So Uni broke its listing high, if you will, and number go up a lot. Sushi is in a very similar position now, just with being a bit closer to price. It actually found resistance originally at that level, and then that's been broken since, and quite significant continuation from that point. I also think psychologically it's pretty quote-unquote important that it's into double digits now, above a key level as well. So this still looks good to me, right? This again, until such a time that support breaks or it does something which it hasn't done on the way up, I'm going to assume continuation until proven otherwise. The first time we actually wrote a bullish technical roundup on Sushi was at this support resistance flip here, right? So that's up, wish I held this, of course, up 430% since then, so something worth bearing in mind. But, you know, the numbers, for me at least, become less significant than the structure per se. One thing I will say about kind of price discovery and, okay, well, there's no resistance, what the fuck do I do? A lot of the time, though not always, you can look at the BTC pair to find relative strength or weakness in the BTC pair to guide you in the USD pair. And that's not always great, and even that can run out of steam if the instrument is really, really strong. But for a lot of these charts, which have an absence of good USD resistance, you can still find some structure as a reference point on the BTC pair. And of course, it works for support as well. Yeah, I mean, the DeFi kind of exchange DEX tokens are just looking really strong at the moment, and until that changes, I mean, I'll let you know when it changes, but until such a time, I'm just going to presume these trends are intact until they're not, right? What's the point of trying to call a top in this? I mean, you can't, and if you did, you're probably not particularly happy with yourself. Comp BTC actually looks good. Of course, this is about to enter into its new USD highs. Yeah, so DeFi sectorally looks pretty strong, right? Pretty convincing show. I've added KSM as well as BAL. Now, just scrolling through this watch list, you probably noticed that a lot of these are pretty closely correlated. I mean, both in terms of just directionality, but also how the structure looks like. Something we actually wrote about again in Technical Roundup, which is free, comes out every week. It's good. I mean, there's no catch. We don't email you with other stuff. If you're not subscribed to Technical Roundup, I legit have no idea what you're doing. I would be in an inestimably better position than I am now for the past however long we've been writing it if I just followed it as opposed to trying to be a genius. Anyway, we saw this type of price action is really interesting because we saw this in a lot of DeFi pairs, right? So when Ethereum nuked, a lot of DeFi pulled back with it and then engulfed the dump completely, right? So you had a range high, dump, gets completely engulfed, and then flip to support. You can find a lot of that type of, a lot of similar patterns in the DeFi pairs themselves, like Sushi, right? You have the same here. Consolidation, nuke, gets engulfed, trades higher. I think Uni had a similar type of thing. Yeah. Consolidation, nukes, engulfs, goes higher, etc. So in those cases, instead of just having to choose necessarily, or in order to get a broad overview of the market, you can just use the FTX DeFi perp. Cred, please share your view on bot trading. Okay, very quickly. Nowadays, the standard for bot trading is a lot higher, where most of these platforms like Stacked Crypto, Alpha Algo, etc., they will allow you to look at proven backtests and forward tests via read-only API or whatever of those bots. So if you want to make an informed decision as to a trading bot, I mean, do your own research, but make sure that the platform that you're using has really transparent metrics, information, etc. about the performance of that bot in a back and forward tested manner. Maybe try to speak to some people who've run it and see what the slippage is like and the order execution, etc., etc. Don't just go on Telegram and any random bumhead trying to get your Bitcoin to give you access to a so-called bot. If you're going to do it properly via a platform that will provide you with the information that's become standard in the industry. Hope that answers your question. But anyway, so for a lot of DeFi stuff, it kind of looked the same, right? You had this big dump, which then got engulfed, and this is kind of what we wrote about in Technical Roundup more or less here, that this is support for DeFi, and then the index is up 30% at that point as well. So yes, there will be outliers within the index, which is fine and cool, but generally, to get a kind of understanding of where the market's at, I think because they mirror, a lot of the DeFi pairs mirror the index so closely just in terms of technicals as well, given the close correlations, it's definitely worth keeping an eye on. And it just looks good, right? It looks good until proven otherwise. We could add some levels, like the breakout level here, at 62s, or even this, etc., etc. But until something really changes, I'm just going to assume continuation in DeFi until proven otherwise. So, of course, the downside of, or the risk, or the premium you pay, whatever, of this type of system is that you'll never get a perfect type of top exit with this sort of thing, right? So let's say we take Uni. Purely hypothetical. You know, numbers going up a lot. Or, I mean, let's use DOT just as an example, because the structure is a lot better. So let's say you're in DOT, and you agree that, you know, you had a big consolidation breakout here, cluster acts as support, and if the cluster acts as support, again, the market looks good. And so what's your exit signal? Well, again, you reverse engineer. Market's been going up while clusters have been doing their job. So maybe number go down if cluster stops doing its job, okay? And let's say that happens. So the market comes in, you're expecting support, and instead it actually fails and closes below the level in this type of way, right? So you get a daily close below, which looks like this theoretically. Now, this, let's say this is around 11.5, right? So this is where you get your exit signal that, okay, the high time frame trend is over, and presumably you were in for maybe, you know, you bought support or you bought the breakout, whatever. Doesn't really matter where your core position is, but the first real, I hate this term because it doesn't exist really, confirmation or the first actionable exit signal you got was at 11.5, right? The loss of daily support. Now that looks fine and it's comfortable, but if you measure that from high to low, all the way back to 11.5, that's like a 40% haircut that you have to give back to the market just to get that strong signal to take some risk off or do whatever, right? So you either sell on the way up and buy back, but potentially miss out on maybe the most aggressive portion of the trend, or if you want to benefit or be exposed to as much of the trend as possible, the price to pay for that is a haircut when the trend finally reverses. I don't think there's like an easy answer with regard to which one's better, which one's best. Maybe some people have a strategy to just keep getting in and out and hedge at resistance and buy back, etc. But executing that and managing it tends to be a pain in the ass. I just think it's important to be aware of the risks. No one's going to sell the top perfectly. If you try to always just sell the top, or just, you know, when there is no kind of resistance when this thing is making higher highs, higher lows, or it's in price discovery, whatever, right? If there's no resistance, there's no resistance. So trying to call the top on that isn't possible, and you may miss out on the strongest portion of the trend. At the same time, if you say, okay, well, I'm not going to try to call the top, but if it breaks down, I'll sell it. Yeah, you may, but at the expense of a significant haircut. I think either way, there's no easy answer, there's no perfect strategy, etc. But as long as you have a strategy, that's definitely better than having nothing whatsoever, watching price give you a 40% haircut, and you've got nothing planned, you don't even know where the market is, right? So come to peace with the type of trend following setup you want to follow for these, or for your trades generally, and just execute those conditions when they arise. There's nothing wrong with buying back higher if the trade that doing so offers is significantly better than the one you were in the first place. You know? There's no shame in that. Crypto Caleb says, I found a... Spammy boy. Yeah, so that's something to bear in mind there. How can we find targets when an asset breaks the all-time high? You can use fibs. I'm not a huge fan generally. I'll use a couple of tools when new all-time highs are set in the USD pair, I'm assuming. The primary ones, and again, simple stuff starts to work. I mean, it even worked on Bitcoin. 40k or 2x from all-time high, like, you know. Point number one is you may find resistance in the BTC pair, right? So altcoin Bitcoin, if it's at resistance in the BTC pair, even if the USD pair is all-time high, there could be some useful information there. And the second one, realistically, round numbers. You know, if it breaks 5, it's probably going to 6, that type of thing. Or whatever kind of looks pleasant or just makes sense. And you can just see that in Sushi, for example. Sushi turned around a lot at round numbers, even after it entered price discovery, so to speak. So I don't think there's a perfect toolkit, but that's the whole point, right? Because there is no perfect toolkit, the market makes do with imperfect tools like round numbers and all that type of shit. Which is cool. Makes everything easier, right? Okay, that's more or less what I've got for this week. Just to summarize, Bitcoin's still range bound. Daily close above 34. There's a good chance we start revisiting the Elon wick, but it's like at the pinnacle of resistance right now. In a similar vein, you've got support at 33. Like, it's literally $1,000 range in Bitcoin. I would stay away from anything outside of short-term trading. I think the place for strong views is not here, but rather perhaps on the break of the range. So something to watch there. For ETH, just watch the 2-minute video on my Twitter. But more or less, the trades I mentioned, I mean, it's similar type of range, resistance, whatever, not too important. The bullish trade that I'm interested in is either the high time frame trending move through all-time high, ideally on a daily close, or, you know, for Queen and Country, do or die closer to 1,200 as a retest of weekly support. Those are my areas where I'd like to really put on some risk and do business. Everything in between is either shorter term or just not as clear. For XRP, if the USD pair holds 30 cents, great, but not really a fan of getting involved too much in this. Other older altcoins, maybe revisit them next stream, but nothing really jumped out. For Doge, in a similar vein, if you want to gamble, well, not gamble, you might have an edge for all I know. If you want to trade the USD pair, trade the USD pair. I'd just kind of stick to more or less the boundaries of the range that it's set up and see if you can do something in between. I'm not going to, because the volatility is on a slightly different level than what you may be used to, and also because the BTC pair, I think, is unlikely to trend. It's literally never trended, so I'm not comfortable betting on that outcome. As for the DeFi pairs, I've added a few. For the most part, they look good until proven otherwise. None are really at huge levels where I'd like to put on risk or that I think are reasonably well defined. But for existing positions, I don't see a huge reason to shit the bed quite yet. The only bearish thing about DeFi, and this is important, is that I've actually taken an interest in DeFi myself, from not just a technical point of view, but from a fundamental, slightly more nuanced ecosystem, type of thing. Like deep dive into DeFi. I spent more or less, I think, either 20 or 30 hours on just fundamentals and, DeFi 101, or what feels a lot more, a lot more than that at this stage. So that's kind of the most bearish thing with regard to DeFi, is that I care about the fundamentals. Whenever I start caring about the fundamentals, it's just not a good thing. But I'm not going to give that too much weight. From a purely technical point of view, which is what we're here for, I can't find any instances at the moment of support being broken. If it does, then I'll talk about it, but betting on that has been the losing trade for the time being. If you want to get a broad understanding, look at the DeFi perp index on FTX and sort of see how the market reacts to either reclaimed support or breakout levels on the way up. That's all from me. Make sure to subscribe to Technical Roundup, free newsletter once a week, all the good stuff, etc., etc. Like the video. If we can get to 200 likes, that'd be sick. If not, I'll survive. Subscribe to the channel, and of course, a thank you to the show's sponsor and the newsletter sponsor, of course, Bybit. You can find their links in the description. It's the most direct way to support the channel, the stream, all that type of good stuff. So be sure to check them out. See you in the newsletter tomorrow via text, and then you've got the duck on Wednesday. Let's hope we get out of this range, get some interesting stuff to do. Until then, trade safely, respect your parents, all that kind of fun stuff. Take care. Thanks for being here, and I'll speak to you soon. Bye-bye.